the dollar's making its rounds. So it's a good time to have a conversation.
What's wild is the way that the price of the dollar compared to the euro and the pound. I mean, it's almost 1 for 1. I think with the euro, it's 1 for 1.
Well, yeah. All right. So let's start this. Yeah, let's start. Well, so let's start this dollar conversation, right? Because the funny part is for Justin, how long? I mean, we've worked together 5 years, 6 years now.
It'll be 6 years this October.
Out of those 6 years, how many of them have you heard one of our clients at least once or twice a month call us up and ask us about the dollar and about how it's going to be worthless? Yep. And how the banks are going to go bankrupt and you got to get all your money out of it.
They're going to seize all your assets.
Yeah.
And
yeah, you better buy gold, bullets, right. Butterfingers, right? So there's newsletters, obviously, right? And the baby boomers are the last generation that were ever, had an affiliation with gold or even just an affection for gold, because they grew up half their life on the gold standard and Nixon, and it came off. So it's fresh in their consciousness. So it makes sense that emails and subscription services that are talking about the dollar and doomsday stuff is going to kind of resonate with them, right? Because it's deeper in their history. Yep. It doesn't resonate with young people, but they go to Bitcoin as their gold.
Bitcoin and credit cards.
Yeah, Bitcoin and credit cards. Are they not the same? So that's so is the dollar doomsday? Like, is the dollar going to zero? Is that going to happen? Because what's happened over the last 2 years in the dollar, 3 years? What's been really going on with the dollar?
I think we should start with, people don't explain that the dollar is benched against other currencies. It's a basket of currencies. So if the dollar rises, it's because it's rising relative to other currencies.
Sure.
If the dollar crashes, it's crashing relative to other currencies. So if the dollar goes to zero, guess what? Other currencies are going to zero. Like, that, you can't have, you got to bench it against something. It's not like the dollar is just all powerful or benched against gold anymore. So it's the philosophy that the dollar is going to crash and go to zero. Our world is in hurt if that happens.
There's emotionality. Like when people say, oh, the dollar is going to go to zero, or the dollar is going to become worthless, right? That brings in this emotionality and fear, and that's what gets people to act. But the reality is, what you're saying is that nothing becomes worthless, nothing becomes zero in the world of currencies, especially global currencies, especially a global, the world after World War II was set around the dollar, right? There was a reason for that. We annihilated the world in war and then said, hey, now we're going to rebuild everything. And because it's on our back, the dollar is the global currency, right? That gave us the advantage, right?
But it's never been the only global currency. We're the reserve currency, they call it. But if you look at it over in history, we're not the only currency that people buy and sell and hedge against. We're maybe more prominent, but the euro was out there, the British pound was out there. So,
but that's the problem with dollar strength. All right. So we've had a lot of dollar strength the last 3 years. Bottom line, even as everybody's gotten these emails, they're wrong. They're just wrong. Right. Like, even though during the Obama years, it's going to be dollar. No, all the time that Obama was in, dollar was stronger. Okay. Go look at the charts. That's all you want. The evidence. Go look at the charts. Just take my word.
What we've been doing for years.
Yeah. And the dollar's been strong. We've been invested in the dollar for over a year and a half, because we knew that when you go into crisis, pandemics, all these kinds of things, because of the structure of the world, the dollar's at the heart of it. Because of what I just shared with you around World War II and all that stuff, we put the dollar at the center of settling petrodollars. Like you can't settle oil and gas and all these things without a dollar involved, right? That's what part of this whole Russia, China, right? Because now they want to trade between themselves. Like they want to go outside of that system. And they will be able to, and that will create a stress fracture on the reserve currency of the world, because now there'll be alternatives. So are some of these emails that people getting, is there some truth to them? Yeah, there are. I mean, every currency that was like the reserve currency, the pound was it for a long time, they break down slowly over like 100-year periods. So this is part of that. Are we hitting a tipping point? Yeah. Do you need to run out and take all your money out of the bank? No, we're not at that part of the tipping point yet. So I think people don't understand how the structure of the world works, is that the world needs dollars. China needs dollars, Japan needs, everybody needs dollars in the current structure of things. Will that change? Possibly, but it'll take a long time. And so right now, when you go into crisis, and if there's recession and other countries slow down more than the US, their need for dollars is higher. They need, and if they're, think about this, if a foreign country's economy slows down, that means they have less capital to go buy dollars, but they still need dollars, right? So they still have a demand for dollars, but they have less ability to do it. And then dollars, because they're not the only country in the world doing that, everybody else's dollar demand gets stronger and stronger. And so it becomes a really tough global situation, especially for emerging markets, when you get dollar strength. And it starts to feed on itself.
The other thing that people are getting in the emails is, the dollar's going worthless because we're printing like crazy. Well, so has every other currency.
There again, it's relative.
So it's match for match type of deal. So
yeah, Japan, China, you name it.
Japan's a whole other topic.
Yeah.
Well, the central banks work in coordination, and we saw this throughout from the Great Recession on. Is we did quantitative easing, we stalled or stopped, and then Europe would do their version of quantitative easing. They would stop. Japan would do their version. They would stop. We would do ours, and we went through a rotation. And when that happened is when the U.S. started doing quantitative easing, the dollar did weaken versus the euro, which made sense, right? Then when we stopped printing and Europe started, the ECB started printing euros, the euro weakened and the dollar strengthened. Makes sense. That's what's supposed to happen. And then when Europe stopped printing and Japan started, the yen weakened and the dollar strengthened. Makes sense. And like Patrick was saying, these are all relative. If the dollar's weakening, then there's something else going strong. So go find that. Right. So as an investor, it shouldn't friggin' matter, right? Now it matters if your portfolio is heavily weighted in a lot of companies, like tech companies, that get most of their earnings overseas, because then you're going to start to see it come into their earnings reports. And we're just starting to see that this quarter, and everybody's starting to talk about it. We talked about it 6 months ago, but CNBC and everybody's just starting to talk about it now, because you're going to start to hear companies report these things.
Because for when you're importing goods and manufacturing and all that type of stuff, it does hurt. But and to the individual investor, having a high dollar, unless you're invested in the dollar, it doesn't really benefit you unless you're traveling abroad. It's going to start to hurt us because it's going to increase cost of goods, but there's really no advantage to the regular consumer to having a high dollar.
If you want to travel over to Europe, you want to buy real estate in Europe, if you got any Italian heritage in you and you could get citizenship in Italy in any way and buy some land, boy, this dollar strength and situation is to your advantage. That's for sure. Great time to travel.
One parity on the euro is unheard of.
When I traveled to Europe, the euro was about 1.6, 1.7 to the dollar, and then the pound was almost, for every dollar it was $2 to the pound. It was like 1.9.
Yeah.
And now we're almost at at an even playing field. And now's the time to travel if you got extra.
I'm surprised. I'm surprised it took this long. I think I think it should have been this way along, but whatever. These central banks have their own agendas. Okay, that's great. All right. So the emails that people are getting, we are wrong. All right. So just trash them, read them, entertained. But here's the thing is dollar strength's been around for a year and a half, 2 years now. So is that move getting long in the tooth? Because when I look at the charts, I now get concerned about our dollar positioning, and I'm looking for places to reduce it because nothing goes in one direction forever. And everybody's now starting to talk about dollar strength. And the one thing that I've kind of learned in this world is the moment everybody starts talking about it, I probably want to go the opposite direction. So we started buying the dollar when nobody talked about it. We've been holding it all this time. Now everybody's talking about it. We've seen good growth in it. So I'm thinking to myself, okay, these are all the signs that I'm looking for, that maybe dollar strength starts to stall here when everybody starts bringing it on the headlines. And we get some weakness in the dollar, or at least a little bit of a pause right at the time that everybody thought it was going to keep running higher.
Flip side of that is we could have even more of an explosion higher if we go into recession. There could be a more demand on the dollar, causing the dollar to even go, even higher, which would that cause problems, eventually if that does happen, but there's no guarantees. Like you said, I think the odds are more that we're going to start to see a softening than we are an explosion higher.
Yeah, I think the strength of the dollar is probably long in the tooth. But I wouldn't vacate, like I wouldn't get out of it. I'd be on high alert, be on my toes that, there could be a reversal at some point. And then maybe I'd start looking at metals, because metals and gold and silver and things like that have been, a big disappointment, the worst disappointment since all of us were in high school to our parents. So, so it's like, maybe you get a reversal there if you can get some dollar weakness, but as people who would be listening to us, our clients and other people, it becomes one of those things that you have to really examine your portfolio, because along with that comes changes in interest rates and other factors that could affect your bonds. And again, if dollar strength gets too much and you have a lot of portfolio and technology stocks or things that get their earnings from overseas, okay, well then you're gonna, you're probably gonna see a little bit of a slow period in the growth part of your portfolio, or even some declines based on it. So, being conservative and be careful around it is definitely warranted.
I mean, I think at this point, if we do get dollar weakness, we probably would start to see, gold increase in value, or silver, or some of those, metals, and it would play right into it. I mean, it's especially if everybody's talking about the dollar now and nobody's talking about gold, or we've mentioned gold has been trash for, quite some time. Who knows? Why wouldn't that be an area where perhaps now is, could be, at least in the coming future, or near term, at least to monitor and watch. Yeah,
well, definitely. I mean, when you look at a chart of gold and silver and the metals, they sure are sitting on lines of support that if they break, it really blows some yearly trends. But if they hold, they're, you're to your point, Justin, if those the current support lines that a lot of the metals are sitting on, if they hold, you could have a multi-year run higher, but you would have to have dollar weakness, and Patrick, what I would expect too is a lot of times when you go into recession, the first phase, you see dollar strength like we've been seeing. But the moment that everybody realizes that we're hitting recession, like we're not there yet, like they're all denying it. Like they changed the definition of recession just because we just had 2 GDPs negative, right? And now they're like, oh no, that's not technically not so. I mean,
we did these other things too.
There's these other things, it's a fugazi, right?
Fugazi.
So, so at the end of the day, once everybody that realization tips, then you'll see rates pull back, and you'll see the dollar weakness, because Wall Street, everybody will start thinking to themselves, you know what, we're going into recession. The Fed's going to go back to their old ways, which is printing dollars, and then you'll get dollar weakness in strength in gold. So I would I'm watching for that. I'm just watching for when the charts make the realization that that's happening, and we're and that will happen the moment everybody realizes, oh shit, we are really in recession. You'll see dollar weakness, because people will think that you're going to turn on the printing press, and then probably strengthen in metals. So that would be the thing to watch. If that doesn't happen, and that's the scary part, is sometimes what's supposed to happen doesn't, and that's when just to run away and hide.
Buy toilet paper.
Yeah.
Well, and I feel like some of the reason that we've had such an explosion recently in the dollar is, we haven't been hit as hard with inflation as the other parts of the world.
Absolutely.
Europe is going into that has the euro, they're going into a major recession coming up,
Correct.
now
Yeah.
because of energy and all that type of stuff. So again, our dollar hedge benched against the other currencies. That's why we've had such an explosion of the dollar.
That's correct. Yeah. Their energy costs and food costs are a lot higher than ours right now. So, but as the Europeans say, they don't solve problems; they manage problems. Yeah. So, which is kind of the truth of all life. I don't know if any problems ever solved.